Hey guys, how you doing? It's Sunday, May 31st. Let's get to it. So in today's video, I'm going to be doing a couple of things. The first half of the video, I'm going to be going over my weekly trades and just going over, so basically I tally up my trades for the week and I will go over my win to loss ratio and percentage returns to see how the edges are performing in the short term, because absolutely, that is one of the most important things. If you expect your edge to continue, you need to measure it over a series of occurrences, right? So I always will spend some time Sunday morning to do that. So I go back and watch all my trade reviews and identify, okay, what did I do wrong? What can I improve on? What am I working on? What's the next step to improve this process and to get one step closer to the ideal mechanical process that I'm executing consistently. And that's it. So this is what I have. So I had 14 trades this week between May 26th and May 29th, and 14 trades, so 8 winners and 6 losers. And I always categorize a trade as being a loser even if I made a mechanical error. So if I made a mechanical error on a trade, I will write a loss on the trade even if it ended up being a profit. So after doing that, I still ended up with a 8 win to 6 loss ratio. Last week it was 10 winners and 7 losers, and adding them up to a total of 18 winners and 13 losers. So as long as I have a positive win rate, generally that's all I'm concerned about. And of course, percentage returns, which is also what I'm concerned about, but less concerned about, because I know that my percentage returns right now are skewed because I'm still experiencing risk management problems in my trading. So once I'm able to accurately manage my risk on every single trade and not make mechanical errors, then I will have a better representation of the percentage returns and losses for those trades. All right. So yeah, my account is pretty much flat for the last month or so. A large reason for that is because of the fact that I was poorly managing my risk a lot of the time on losing trades, which is actually one of the hardest things to do. So that's why today we're going to talk a little bit about variables that come together to identify your edge. So what can be a variable? So generally, I don't know if any of you are into coding. I'm certainly not. But I think in order to code something, you need to be able to understand it from a very logical standpoint. So you can tell a computer what to do, but in order to tell the computer what to do, you need to understand what it is to the point where you can program it into the computer and say, this is the variable you're looking for, and it has to exist in this environment. And that's kind of what I'm going towards right now, because the clearer you can explain something, the clearer of an understanding you have of it, therefore you'll be able to easily execute it when it comes time to execute it, right? So I wrote down a list of a couple of variables. So a variable could be anything that exists in the universe of a price chart or any component of what is involved in your trade. So volume could be an example of a variable, right? So you could say, if the volume is high, then you could do a certain thing. And I think a lot of this stuff relates to if-then scenarios. So if X, Y, and Z variables are present, then execute present trade, right? So that's kind of what I'm going towards here. So an example of a variable would be something like volume, or a break with no follow through, or the trend of the market being up or down, declining volume approaching a key price point. So I wrote down a few of them. And again, the easier you're able to explain a variable, that's generally where you want to be, because when it comes time to program it into a computer, you'll know what to program. So it's a matter of learning about the environment, learning about the variables that come into play, and then being able to write them down and say, what are these variables that have to come into play for this edge to be expressed? And the clearer picture of what it is you have, the easier it will be for you when it comes time to execute the trade, because you're limiting yourself to those variables and eliminating the intuitive side of it, which is, oh, but maybe if that could be a little bit more higher, and that maybe that could be a little bit lower, or maybe if something happened, something would change, right? So that's your intuition coming to play, trying to be clever about the affair and saying, but maybe it won't work if this happens. But it doesn't matter, because at the end of the day, if the variables are present that you've identified, then there should be no reason to not execute the trade. Are you guys with me? So that might be a little bit of a rough explanation of how I'm sort of developing my approach to understanding variables. But that's sort of what we're getting towards. All right, guys, so let's do a little bit of technical analysis to end the video today on the S&P 500, the NASDAQ, and the Russell 2000 just going forward to today's week. Now, obviously, so this video is being recorded at 11:30 in the morning on Sunday, so I don't know where the futures market's going to open at 6 p.m. You know, for all I know, we could open up here, we could open down there. So just keep in mind that this analysis is relative to what's happening right now. Always. So you can see that we closed strong last week. So we're going to start out with the S&P 500. So you can see that the S&P 500 is still in a daily uptrend. And looking at the 4-hour chart, for me, this is a better chart because you can see that we pulled back. We had a two-legged pullback, and then we resulted in a bull and closed the day strong on Friday. So in my opinion, it's all about the 4-hour higher low that had formed, generally being the lows of Friday's session, okay? So that's our last 4-hour higher low that formed. If we lose that 4-hour higher low, then we're probably gonna be looking down to the levels of the previous sell-off earlier in the week, which would be there. Now, if we lose those levels, then it's more likely that SPY is gonna come down and form some sort of a daily higher low. And again, SPY has lots of room to work with to form a daily higher low, as our last one is way down here. So even if we start the week with some consolidation this week, I think it would be relatively healthy for the market to do so. Looking at the weekly chart, you can see that we're right back up to levels from late 2019 here. So, you know, all-time highs is not out of the question, and nobody should think that they are out of the question. And again, this is getting back to psychology. It's the fact that the more people think that all-time highs are out of the question, that will make all-time highs more likely. All right, here we get it. Let's look at the NASDAQ real quick. So the NASDAQ, as you can see, much stronger, and all-time highs certainly in the question. Because of how aggressively we've run up, we could say that a lower high is still likely. As you can see, the daily chart is still sort of grinding its way up, but this week has been an example where we're seeing money kind of come out of big tech and go into other laggard sectors, which makes a lot of sense. So for the NASDAQ, it's the 4-hour higher low. So you can see that we had a 4-hour trend change to the bear, we regained it, and then we change the trend back to the bulls. So in my opinion, it's all about this 4-hour higher low that had formed at 93.24, and then this one which had formed at 93.75. So if we lose those 4-hour higher lows, you could say that that is a failed 4-hour trend change, and the bears would be back in temporary control, but to potentially consolidate for another daily higher low. Now again, our daily higher low is way down here at 91.77. If we lose that, then we will likely see consolidation on the weekly time frame for a weekly higher low. So just stay aware of your levels on these charts, guys, because I said chart, guys, because those trends are going to be important going forward from here. Now, like I said, we can open up here tomorrow, we can open down here, and that's why what I'm saying might not be relevant depending on where we open in the futures market. So we closed very strong on Friday, and we're looking back up at our highs of this move so far, 96.07. We're right up to there. We're a bit exhausted going up into there, so I'm curious to see where we're going to open on the futures trading. So keep an eye on the daily higher lows, keep an eye on all-time highs, and let's move on to the Russell. The Russell 2000 here, we're looking up at resistance. So we managed to get back above this 1376 resistance that had formed. It was a very impulsive move up, resulting in a nice two-legged pullback that got no follow through, and now the bulls are back in control in the short term here. So looking at the weekly time frame, we're above our weekly exponential moving averages, and we're pretty far away from all-time highs. So looking at something like a 6-hour chart, you can see how we pulled back to the moving average, regained it, and then lost the level and regained it again. So in my opinion, as long as we hold above 1378, then the bulls still remain in full control. If we sell off below that level, then the IWM is likely consolidating, looking for a daily higher low. So as you can see, there's a lot of space to work with for a daily higher low if the IWM consolidates. Now keep an eye on the 4-hour trend. You can see that we confirmed a 4-hour downtrend, and we rallied into the end of the close Friday. So if we break the high of Friday, then a temporary daily higher low might be set around here. So we have the high of the move, the low of the move. So we'll see if we tighten up in this range and see a break by the end of this week. All right, guys, so that's going to be the end of the technical analysis section of this video. That is pretty much it. So guys, if you enjoyed these videos, please leave a thumbs up, subscribe to the channel, and I will catch you in the next video. All the best to you going forward. Take care. Bye.